Okay, I'm going to take you through closing entries and creating the income statement and the balance sheet. So what we're going to start with is this packet that I've given you. This is basically a portion of a worksheet. It's a partial worksheet. Okay, so these are the last couple of columns in a worksheet. So really we're looking at these columns on this page and the balance sheet columns on the back side of this page. Okay, there is one correction because dividends really goes on the balance sheet side. So I added dividends down here at the bottom, and really we don't put dividends. It's not part of the income statement columns. All right, so this is partial worksheet. There's other stuff in here, all the adjustments, the trial balance, all that good stuff is there. Okay, and then on the balance sheet side, same thing. This is where all of those other columns would go. Okay, we're going to use the income statement columns to complete our closing entries. So you also should have pulled out your closing entries notes packet from back when we did this. And there are some pictures as to what closing entries should look like. But the big thing I want you to see are the 4 closing entries, because these are the 4 entries that we have to create in this order. Okay, so the first thing that we're going to do is close any income statement columns with a credit into income summary, then any with a debit into income summary, and then we're going to close income summary into capital and drawing into capital, which for us is retained earnings. Capital is retained earnings in a corporation, and the drawing account are dividends, because we have stockholders, not owners. Individual owners, it is. Okay. All right. So flip over to the page that has all the closing entries, and we'll work through that. Actually, I'm going to tear this off so that I can flip back and forth a little bit better. Okay, so for closing entries, there are 4 of them. Okay, these are the 4 closing entries. Okay, and we are going to use the worksheet income statement columns to get this information. Okay, again, worksheet income statement columns right here. Okay, so the first closing entry is anything that is a credit. Anything that's a credit in the income statement column. So looking here, credit, we have sales, we have purchase discounts and purchase returns, and interest income. Okay, we're not going to actually have interest income, I don't think, in our simulation in Authentic Threads, but as a closing entry, we're going to do whatever's in that column. Okay, so if it's a credit here, remember the idea of a closing entry is that we've got to get these accounts down to 0. They've got to zero out at the end of the year so that they're starting fresh the next year, because these are not accounts that we want to have accumulate year after year. Okay, we want to start fresh. We want to see what our sales are for this year, not for the last 50 years combined. Okay, we're only concerned about this year's sales. All right, so that's why we go through this closing process, is because these all need to be zeroed out. So if sales is a credit here, how do we get that account to zero? We debit it for the same amount, right? Okay, so here, credit, close to income summary. All right, so sales, 697,375. Credit here, debit here. That means that'll go to zero, right? When we start posting. And then 1959,2554 for purchase discounts, purchase returns, and allowance. And interest income down here at the bottom is the next one. Okay, all of those are debits. They're going to close into income summary. So income summary is our credit. Okay. The second closing entry is anything with a debit balance closes into income summary. Okay, so anything with a debit into income summary. Looking at our income statement, partial worksheet. Income summary is actually going to have something in it this time because we did that merchandise inventory adjustment. But that's not something we're closing things into income summary, so we're not going to mess with it in this part. Okay, that number's just going to sit there. Don't worry about that. So we're going to start here with sales discount. Okay, sales return allowance, purchases, all the expenses. These are all debits. We need to get all of them to zero. We have to credit them. And if we're going to credit all these accounts, our debit is income summary. Okay, so you can see here income summary. You can go ahead and write the words because you may not know the total yet. Write the words, then start listing every one of the accounts that has a debit balance and the number. Okay, and those will be credits in your closing entries. Then you can add all those up to figure out what income summary is. Okay, that's the second closing entry. The third closing entry is that we want to close income summary, retained earnings into income summary. Close the income summary into retained earnings for us. Okay, so we have, if you go back to your worksheet, this is basically net income to retained earnings. Okay, on your worksheet, I'm not showing it here, but on your worksheet, you will have the calculations down here at the bottom, and you figured out net income, right? So you'll use that number, and you'll close that into retained earnings. And then the dividends is given. Really, it's above income summary, but we do have to go up there and grab it. Oops. To complete the closing entries. Okay. So then dividends into retained earnings. Okay, and that's what we're doing here. So basically, remember we talked about this at the very beginning, is the owner gets all the profit. Okay, so here, the owner, which is based off the capital is the retained earnings, is net income, as getting the net income. Okay, dividends are just like drawing. So if the owner pulls any money out, we have to pull it out of their retained earnings or their capital. In this case, if we issued dividends to our shareholders, we have to pull it out of retained earnings. Okay, so those are are our 4 closing entries. Okay. Then what I want you to do at this point is make sure you go post all of those closing entries into your ledgers. And then once you do that, you should have all of these accounts zeroing out. Okay? Then the next thing that you will need to do, and if you're following along in my notes or in the book, okay, right here we had done the closing entries, and then number 4 says to prepare a post-closing trial balance. Well, a post-closing trial balance is just going through your green book once you've posted all of this and telling me what accounts still have balances in them. Okay, so you just get the heading on there, you start going through the green book, cash still has a balance, write it down, give me the number, making sure it's in the right column. If it's debit in the green book, it's a debit here. Petty cash still has a balance. Accounts receivable. Okay, we don't write anything down that has a 0 balance. When we finish, these 2 numbers should equal. Again, if they don't, we have to stop and figure out why. Okay. All right, then, again, looking at what I have next, that was 4. Remember, I changed all the numbers. 5 is prepare an income statement. 6 is to prepare a balance sheet. Okay. So for this one, we are going to look at the income statement first. Okay. So here's one. This is already done. I'm just going to go through and mark things. You want to get all these numbers, or most of these numbers, come from the worksheet. Okay. We're going to have different groups that we're going to be looking at. One group, it's going to be operating revenue and sales. Okay, and then cost of merchandise, and then expenses. Okay, and we're not going to do anything with these right here, so we're just going to mark it down. Don't worry about those. Okay. So when looking at this first group, okay, basically it's revenue minus expenses is net income. Okay, but revenue is sales, but half those sales, some of those sales, we had to buy the product, right? So we have to figure out what the cost of the merchandise we sold was, because then that actually tells us what our profit is. Okay, so an important formula in accounting is net sales minus cost of merchandise sold, COGS, or you might hear COGS, cost of goods sold, equals gross profit. Okay, it's one of those basic accounting formulas. And to figure out cost of merchandise sold, you have to know what the beginning inventory is, what do you already have in stock, plus any purchases you've made, okay? But we need to signal that should really be net purchases, okay? Because there are returns and there were discounts that went along with that. Just like here, net sales, there were returns and there were discounts. All right, so we're really using, that's where the word net comes from. Net's taking out these items right here. And then minus the ending inventory, because that's what we still have sitting. We haven't sold that yet. That gives us the cost of merchandise that we did sell. Okay? So again, most of these numbers come from the worksheet. Let me... Alright, got that torn apart now too. Okay, so we can see that we've got sales, 697,375.62, right there. Alright, but to get net sales, we have to take out all the discounts, take out all the returns and allowances. Okay, discounts, returns, and allowances. We've got two numbers there. Okay, the reason I'm giving you these handouts is because every company does their income statements a little different. They may not want to show the math necessarily like this. But what you want to know is that sales, comms, gross profit, those are the big numbers in this column. This is kind of a totals column. Okay, these other ones can be used for calculations. Okay, so we're starting out with sales. Here's our discounts. We're going to add those up, put that number here. Okay, so this plus this equals this. This minus the less, right? So this minus equals this. So this is net sales. Okay, cost of merchandise sold. Now this one, we're going to have to go get our numbers from somewhere else for the beginning inventory. Beginning inventory. That's going to come from our ledger. What did we start with at the beginning? Okay, or actually you can get it from your worksheet. Okay, if you go to the trial balance right here for inventory, it'll be that number. Okay, so that's the beginning inventory right here. Beginning inventory plus purchases. Okay, but purchases has some discounts and some returns and allowances. So we're going to add those in, or subtract those out, I guess we should say, really. We're going to get those again. Purchase discount, here's our purchases, here's our sales. Okay, get those numbers from our worksheet. Bring them over here. Okay, now we have purchases minus our discounts. Gives us our net purchases. Okay, so beginning inventory plus purchases minus ending inventory. Okay, so now look at what your ending inventory is. Look at your worksheet. What was your ending inventory? Okay, or look at your ledger. What was your ending inventory? Get that number. Actually, that one will be on, that'll extend out over here, so that one will be on here too. The 107. Yeah. Okay, not, our beginning won't be on the balance sheet columns. It'll be back on the trial balance columns. Okay, so here's our ending inventory right here. Okay, so purchases, this is our total minus, well actually let's see, merchandise plus purchases equals this number minus merchandise equals cost of merchandise sold. Okay, so net sales minus cost of merchandise. Net sales minus cost of merchandise equals gross profit. Again, follow the pattern, right? What goes in what column? Just follow this pattern. You just pull the numbers from your worksheet. Okay, expenses, a little bit more straightforward. All these expenses come from the worksheet. You've got this whole group of expenses right here. Okay, just right amount, list amount, total amount, right? All of this added up to equal this. Okay, now we have gross profit minus expenses gives us the net income before taxes. So do notice that federal income tax right here, it's going to get its own little section because that's an important thing for people to look at. So stop before you get to federal income tax expense. That's why it's kind of always at the bottom and not really in alphabetical order, okay? Because it's going to have its own special line so we can see what our profit was, our net income before taxes, and what it is after taxes. Okay, we always want to know how much tax we're spending. Okay. Okay. So then the next one is the balance sheet. Let me take a look at something real quick. Okay. Okay. Then we are not, remember, we're not doing a statement of stockholders' equity. We'd mark that out. Balance sheet, and here it is, balance sheet. Okay. So again, looking at our numbers, balance sheets is assets equals liability plus owner's equity, right? We got to make sure our accounting equation is in balance. That's what we want to do right here. So we're going to have the sections: assets, liabilities, owner's equity, stockholders' equity. Okay. We're going to make sure that this number and this number are equal at the end. Okay. Again, most of it's coming from the balance sheet columns of the worksheet. Cash, petty cash, accounts receivable, the contra. If it has a contra, you're going to have these little extra calculations, okay? So the allowance for uncollectibles, because these are the accounts that we think won't send us money, right? So it's going to decrease what we actually get. That's going to be a contra, right? And again, accounts receivable comes from the worksheet. Allowance comes from the worksheet. You can see one's a debit, one's a credit. This one is a contra to that one. So we'll have to do a little bit of math there, okay? But you can see it's on the same line as that. So that's our basically our accounts receivable, merchandise inventory. You see how it's just all coming from here. Let me see it. There we go. Supplies. It all matches up. Prepaid insurance. Actually, I guess there's, I don't know, those are mistakes. Okay, and then we actually have a different section for plant assets. So current assets versus plant assets. Again, look at this, follow the pattern. Yeah, for authentic threads, it should follow this same pattern. Plant assets are things like equipment. Okay, because we're going to have depreciation going with that. Depreciation is another contra account. Okay, so we'll subtract out that number as we move through it. Okay, and you can see here we've got the credits to go along with the debits for the assets. Okay, then we have all of our payables, current liabilities, all of our payables coming in. We're just going to add those up. Okay, so total assets, these are our liabilities. capital stock. And it's sitting right there telling us about it. Okay. Then we've got retained earnings. So let's look at the math for retained earnings, because that's not what we have sitting right here, is it? This says 122,591. Okay. This says 66259. So 66259.31 plus, remember, the owner gets the net income. So the net income is, I don't know, did we actually figure out what net income was? I don't know that we did. Okay, let's just make a note. Okay, right here. Retained earnings. We want to add net income. And we probably want to subtract dividends. Okay, and we did that in our balance sheet way back when, where we took our capital, we added net income, we subtracted what the drawing took out, and that was what was left in retained earnings. Okay, so that's where that number's coming from. Okay. Do I have net income? Oh, I do. I do. Okay, let's try the numbers. 122,591. No, that's not the number I want. 66259.1 2 minus 20 dividends. Yeah. Okay, so add net income, subtract the dividends. Net income was right here. I was able to find it, adding that in, and then dividends, I know, were $20,000. Subtracted that, and that's what the retained earnings is for the balance sheet. Doing the math, 204 should equal 204. Okay, and once you finish the balance sheet, you are done with Authentic Threads.